Hey traders, David Frost, August 10th, 2017. You're looking at a daily chart of the SPY, or spiders as they're known, which is also the proxy for the S&P 500 index. I want to point out a couple of very specific things, and then what I want to do is I want to give you some ideas as to what you can look at as either traders or investors to get ahead of the game. Things that you can look at each and every day to give you a leading indication of where the market may be headed in the short and the long term. These are the things that set successful traders and successful investors apart from those that are not necessarily in the know. As you can see, 2 days ago on August 8th, the S&P 500, or the spider as you're looking at here, made a high. It actually made what I call a top because we put in what's called a tail candle. The market rallied up earlier in the day and sold off, finishing not too far from the lows and putting in a tail candle, which is a signal. It's the market's way of giving you an indication that a trend change is at hand. And that's only the first of a few different things that gave us an indication long before the market had the kind of day it had today. We had a pretty good idea that something like this was coming, and also, not to mention, that there's most likely more downside coming. But we had the tip-off long before this market topped out and long before today's activity happened. In fact, the tail candle that was put in on the S&P 500, or on this chart, which is also the proxy, the spider chart, the tail candle that was put in was actually the last piece of the puzzle that we needed in order to know that the likely scenario was that the market was going to go lower. I'm going to give you 3 indexes that are fantastic proxies of where the market is headed because they act as leading indicators whether the market's headed down or the market's headed up. These 3 indexes generally will lead the market in either direction, and they'll make their moves long before the S&P 500, long before the Dow, long before the NASDAQ. Now remember this, the S&P 500 so far has topped out as it stands today on August 8th, 2017, just 2 days ago. What I believe to be the best and my favorite leading indicator of the markets happens to be the Russell 2000 Index. The IWM, which is the chart you're looking at now, is the exchange-traded fund that tracks the Russell 2000 Index. First, the Russell 2000 has 2,000 stocks, much more than the S&P 500, and obviously more than the Dow that only has 30 stocks. So it's much more representative of a broader marketplace. In addition, the Russell 2000 index is a small cap index. Why that's important is because it's much more representative of how businesses are doing across America. The S&P and the Dow have big global companies, so some of their revenue gets pulled in from other countries, but the IWM, or the Russell 2000, is representative of our marketplace here in the United States. And that's why it's one of the best, if not the best, proxies or leading indicators of the market. What you'll notice here is when the Russell 2000 topped out, it was back on July 25th, 2017, long before the S&P topped out 2 weeks later. What I can tell you without a shadow of a doubt is when the Russell 2000 index is going in a different direction than the S&P 500, you want to pay attention because generally speaking, the Russell 2000 is going to lead the market, it's going to be ahead of the game, and it's your best leading indicator of the markets. From the top, the Russell 2000 index is down between 5 and 6%, while the S&P had its first big down day in quite a while. That's a leading indication, and that's the type of thing you want to pay attention to across the markets. Reading charts is like reading another language. Once you can learn how to read the charts, you give yourself an advantage because you have a much clearer understanding of what's really happening. When you're in a foreign country and you don't speak the language, you feel a little lost if nobody speaks your language. It's the same thing with the markets. If you don't understand what's going on, you feel a little lost and you end up taking your cues from people that don't necessarily know what they're talking about, like on television. How many people were telling you that the IWM was selling off, so be wary of the spiders or the S&P 500 and the Dow Jones Industrial Average. How many people were telling you that? My traders knew that because they look at it each and every day. Another wonderful proxy for the markets is the transportation average. This is the IYT, which is the exchange traded fund. That's the proxy for the transportation average or the Dow Jones transports. The concept is the same as the IWM. You'll see that the transportation average actually topped out on July 14th, 2017, about 3 weeks earlier than the S&P topped out. Inside the transportation average are some of the leading stocks that move goods across the country. Why is that important? It's important because if those stocks aren't doing well, and the top 6 stocks in this average make up more than 50% of this average. And if you look at the charts of these 6 stocks, they were telling you that there's trouble in the marketplace. Federal Express or FedEx, Norfolk Southern, UPS, Kansas City Southern, Union Pacific, J.B. Hunt. These are the leading companies within the transportation index, and these stocks were not doing well while the S&P 500 and the Dow were rallying to all-time highs. That's telling you something. That's telling you there's trouble under the hood and you need to pay attention. These are the things that my traders know and watch each and every day. These are the things that I teach and can be applied on daily charts, and they can also be applied on intraday charts because the same leading indicators that I just mentioned, the Russell 2000 index and the transportation average, those same leading indicators will lead the market intraday, and they'll also lead the market day to day. The third one that's extremely important is the SMH, which is the exchange traded fund. That's the proxy for the Philadelphia Semiconductor Index. And it's the same story. Look when the SMH topped out. It topped out on June 9th, and it has not challenged the highs ever since. When a leading indicator like this, which is made up of some of the leading technology companies, is what's called diverging from the market, it's also a sign of trouble ahead. Especially when you take these 3 indices together, it's like a big red stop sign in front of you. Even as the S&P 500 is going higher and the Dow is going higher, somebody's holding up a big red stop sign, and the question is, are you paying attention? Can you read the stop sign? Folks, this is just the tip of the iceberg. If you want to learn how to really read the markets, if you want to learn how the markets really work, if you want to learn how to trade the markets intraday, if you're a day trader, if you're a scalp trader, if you're a swing trader, you can get the whole ball of wax over at LazyEMiniTrader.com. It's underneath this video. Click the link. I'll give you 3 lessons right out of my course. That's a masterclass trading course. Gives you everything from soup to nuts, how to trade the markets, how they work, how you could take advantage of clearly identified price patterns that a market is making on the charts. If you want to learn how to read the charts, come over to Lazy E-Mini Trader. I'm David Frost. Thanks for tuning in, folks.